All right, Wade, we are live on both.
Fantastic. Well, hello and welcome to a beautiful Wednesday here in Greenville, South Carolina. I want to go over really just a conversation with you guys, especially if you're new in reference to submitting application, having your clients submit applications and their expectations. Um, First of all, congratulations, you guys are putting more apps in than we have in a, oh man, I don't know when. It's just consistent. And that's exciting. And we got a lot of large fundings. Congratulations to Harlequin. We're working on a deal to get funded today for 300,000 with her. We've got several renewals. Matthew, we got that renewal out for your client. There's just a lot going on right now. But we had an opportunity this week to really fund a couple $1 million worth of funding that we were not able to get. And let me tell you why. When the application was submitted, the client put on the application that their expectations on one was to receive $3.5 million. They were doing about 280 to all the way up to close to 500,000. And because of that big fluctuation, we were able to get them 375,000, which was the whole deal was great. But the good doctor contacted us and said, listen, I put on the application that I wanted 3.5 million, and we weren't able to work with that particular one. We had another one that was a trucking company. They're doing enough to probably get about 40 to 50,000 max, and I was able to get them an incredible A paper deal for 50,000. Lo and behold, they said, well, did you read my application? I wanted 800,000. Well, anybody in their right mind would want 800,000, but they're only doing about 40 to 60,000. This was an incredibly good offer. We had another one this week that wanted a 500,000 that was doing enough to get a really good $200,000 offer with the 100% prepayment discount. And we were not able to bring this one home either because the person said, listen, I told my agent and I told you this is what I'm looking for. I'm not scolding anybody. I'm just saying that expectations sometimes are so huge. Think about it. If I'm a client and I am expecting, $300,000 and I'm doing 10,000, 20,000 a month, I got to know in the back of my mind that's not possible. I mean, these are non-collateralized signature type fundings with no collateral. It's revenue based, and the bank won't give them the funds. And that's one of the things I talked to each one of them about was, try to go to your bank and see what they'll do, but they're not going to give you anything either. And they had already been to the bank, almost every one of them. What I'm asking you to do is if you have a relationship with the client and you're talking to them, it's not someone you found online, kind of, temper their expectations to be realistic. If in cases of people getting up to 15,000 in funding, they're going to get anywhere from as low as 25% to 75% of what they're doing monthly, probably closer to that 75%. They're doing above 15,000 and they've got okay credit. They're going to get somewhere between 75% to 100% of what they're doing, what their monthly revenue average is. And if they're doing, and if they come in with a FICO that is, high 600, 700 plus, whatever, they're going to get up to 200% of what they're doing monthly. And I had multiple cases this week where it was 150 to 200% of what they wanted. It was the A paper where they got the 100% prepayment discount. It was amazing that they said no to it. But then you look at what their expectations were and you realize, oh my goodness, they could not possibly, and think that anyone would give them $1 million doing, $20,000, $30,000 a month. They couldn't even make the payment. It would take up what their revenue is for a month. So expectations are important. And I be more than happy to do a complete training if I'm asked to for what to expect when you submit. But I think we've already got those trainings in your DAC back office. But anyway, that's just one thing. The second thing is I was fortunate enough to, and this has to do with funding, but it goes further. I had talked to a company that is a national company, actually located in the building that I'm in Greenville, South Carolina here, and they have a pizza franchise all throughout the United States. And I began talking to them about funding. They wanted to get some funding to open up a new one and what have you, and they didn't take that funding. But I went ahead and asked them about the dual pricing for merchant services, and they said, okay, we'll try. They tried us on 3, and then they tried us on 5 more. Now they're getting all their 30 plus locations on the dual pricing. David and I had a great call with them today, and while we were talking, I just simply said, well, Mike, let me ask you something. We now are a national full service insurance agency, and I know that you have health coverage for all your employees. What if we can save there? And that'll be another amount of money you can save. And by the way, first of all, he said, hey, yeah, let's get a census of it. It was that easy to get that prospect, and I had not done that yet. And just, honestly, I was too much concentration was put on just getting him the what he wanted right then. I wasn't thinking about what the potential was of other programs that we offer, and I left that just sitting there for a long time. So that's going to be a really, really good program, and they got a lot of employees. And then I started thinking, oh my goodness, I've got a buddy of mine with 26 restaurants. They got 2.6 million in ERC funds, and why haven't I asked him about the health coverage? So you can go back to your client base and all the fundings that you've ever done and begin talking to those people about dual pricing or talking about healthcare. It's just, those are low hanging fruit that I think you would probably, if you thought about it long enough, you'd say, man, why haven't I done this already? So that's exactly what I'm doing. I'm just really pumped up and excited about funding, but I'm also excited that regardless of whether they accept the funding, I've got all these other business services that these folks can take. And I suggested to David that we start contacting all the clients, whether you contact them or not, and prospect and help you get new clients with all these other services that we have. Whether they were funded or not is irrelevant. You're out saving them money. Therefore, you're going to make money, of course, but you're out there saving them money. And talking to that restaurant, David made a point when he was had the conversation with him. He said, well, he and I were talking to him, and he said, well, what kind of profit margin? So they work off of about a 5% or no more than 6. I think it's closer to 5% profit margin on a monthly basis. And wow, when you start thinking about it, if we're able to save them 2 points or 3 points on the merchant services, because quite frankly, almost 100% of that money that they take in, and that $250,000 to $500,000 they take in every month is going to be through credit card processing. 2% is 40% of their profit. Think about that. So keep your eye keep focused on what you're doing, but keep in the back of your mind, this is supposed to be a funding teaching, but all those funding opportunities that you have can turn into a whole lot more. And just because they said no today, they only said no because they couldn't use that or they couldn't qualify for it today. But you've got other things in your pocket that you can pull out and talk to them about. And so, Morgan, do we have anybody here that have any questions about anything to do with funding? If you just want, we got a lot of people on, so we got a hand up.
Sasha, you can go ahead and unmute yourself. Sasha, I'll try to unmute you again. I saw you unmuted for a second there. Ask you to unmute one more time.
Hello, can you hear me?
There we go.
Okay,
Yeah,
sorry
we
about
got
that.
you.
Thank you for
there.
taking my question. So I am very new here. It's been about a week. So if a customer is interested in funding, I have an appointment this evening. What is the exact process that I need to have him go through to apply? Is it just go to the website or what is that?
Absolutely. That's the beauty of this. You don't really have to worry about gathering documents. You can talk to them in general about the funding and what you have to offer the revenue base, but you have a link. And that link is the only thing that you leave behind. And then you're pretty much out of the picture after leaving that link. And once they apply, we handle it. We gather the documents that are not uploaded already on that link. And then we contact them, we make the offer. And we keep you informed all the way through. You're getting emails every single time that something changes on that file. So I think it'd be great to go back and just take a look at the getting started training on funding, and you'll see that it's pretty simple. You just have to meet, greet, and inform. And if you haven't already done so, Sasha, I would purchase those postcards, because quite frankly, I don't ever do. I've never spoken to anyone about funding hardly that I didn't have a postcard within the reach of my briefcase, and I always give out those cards everywhere I go. So hope that answered your question.
Absolutely. Thank you so much.
Thank you. Have a blessed day.
All right, and we've got one more hand up. Pamela, you can go ahead and unmute yourself.
Hi, Wade.
Hey.
Since we have so many participants on this Zoom, can you just give a quick recap summary of the different programs? I know we have the select funding and regular funding and some things going on. Can you just give a quick recap of what options are out there that we're offering now?
And thank you for that. That's a good idea. When you look at our presentation that we have, it's a big funnel coming down, and when we get all the information in, whether they're looking for revenue-based funding or whether they're looking for lines of credit, we have all that available. Now, we got great information in your back office about who qualifies for what. However, if you find a client that has incredible credit, then they're automatically, you don't really have to talk about it, but they're automatically going to go into what Pamela was talking about, select funding. Select funding is, and I've done multiple trainings on it with slides, but select funding is when we're going to be able to offer them incredible rates in the anywhere from a 119 to a 129 rates on getting the funding. And if you don't know a lot about rates and you're new on here, you need to go study that. You need to go spend a little bit of time in your watching videos in your back office just to get this training. And if you have someone who brought you on board and they have never taught you about training, shame on them. They need to go ahead and go over all this with you, but you can do it yourself. you don't have to worry about who brought you in. So what we do is we look at that, and the lenders come back with a couple different options. We've got select funding, which is going to be when we're able to give really, really, really good rates on longer terms, like 12 to 24 months. And those are the ones who are been in business for 3 years. They've got a 700 credit, and they're in the right industries. And if you don't know what those are, we've got the 10 top industries that are in your back office are all laying out right there for you to study and look at, construction being one of them. We also will be able to, in most cases, if they're going to qualify for what we call select funding, they're also going to qualify for what we call our 100% prepaid discount program. And what that means is, let's say they take $200,000 from us today, and whether it's next week or 2 months or 3 months from now, if they decide to pay that back with the 100% prepaid discount program, then all the interest and cost of funds is waived on this from that point forward. Usually in our funding, that doesn't happen. You get prepayment discounts if you pay it off in the first 30, 60, or 90 days, but you don't. And then on A paper, you'll get 20 to 25% discount of the cost of funds that's due on that funding. But with this program, which we just implemented a couple of months ago, and we funded a lot of people on it, they get 100% prepayment discount. All they're going to pay from this point on is what the principal amount is, and all the rest of it's waived. Did that answer your question, Pamela, or do you have anything else in mind?
No, yeah, that was great. I just wanted, like you said, just a quick recap so that everyone was kind of aware of, what we are offering right now, so that when they go forward, they have a little bit of knowledge. I know everybody needs to go back and look at the videos and so forth, but yeah, that was a great recap. That was what I was asking.
Thank you.
Thank you.
All right, we've got Lisa. You can go ahead and unmute yourself.
Thank you so much. How's everyone this morning? I just wanted to ask you, Wade, you had mentioned you have the funding as well as the payment processing on one card together. I don't know if you have it handy to show. I just wanted to know, like, which flyer are you using for both?
Each one of them, and that's a good question. We don't have them together, but I've got the postcard for payment processing. I usually keep it right here. Yep, here you go. I've got my DAC payment processing. See, I use the larger ones. Then I've got my DAC cards. So what I was saying is that once I don't try to be a jack of all trades and a master of none. I try to really hone in what they're interested in today, and then whether I fund them or not, I'm gonna get back with them and talk to them about merchant services, because guys, if you don't understand dual pricing, you need to go learn, because you're going to get, these are profits. And a lot of these businesses are working off of 5-10% profit margins. And if I can give them 20 to 50% more in profit because of their merchant services, fabulous. And then if I can save them another 30 to 60% on their premiums for healthcare coverage, why not talk to them? This is where I've failed. Because I'll go get the funding or not, and once I've done the funding process, I don't think to go back like I should. But I'm after the experience that I had with David on the phone, and light bulb coming on, and I asked for the healthcare, and now I'm getting the census done. It's crazy that I haven't done this before. I think we got one more hand up.
We do. Nick, you can go ahead and unmute yourself.
All righty. Can you hear me, Wade?
I can.
All right. Hey, buddy. Great training today. And just wanted to jump on real quick. Just throw in a little comment on what you actually trained on right expectations, right? And those applications going in. you were receiving phenomenal offers, approvals from A-paper lenders for these businesses, right?
Oh, yeah.
But they had the wrong expectation, and they were expecting much more. And I've seen that happen. With a few. Where we do get a client approved for a phenomenal offer, but probably went in with the right expectation, but also the other part of this is maybe they didn't have a good enough use for the funds, right? Even though they had got a phenomenal A-paper lender offer approval, right? And sometimes they do have other options, which could be another factor. Or I've seen in other instances where we've gotten one of the highest cost approvals for a client, but they actually had a time-sensitive need. The opportunity of having those funds, the benefit of having those funds was much greater than the cost of that approval. And I just wanted to just say to all the agents on here, because we have several on, is bringing up the right expectation, what the cost of the funds could possibly be, and then getting into what they're going to use the funds for, which is everything, right? So Mr. or Mrs. Business Owner, if you had this amount of if we were able to get you this amount of working capital, what do you have in mind? What are you going to use it for? And let them explain what they have in mind. Sometimes I've with the several conversations I've had, sometimes they don't have an idea, that they just want to have it sitting in the bank just in case or for a rainy day, right? And that is the wrong strategy for this type of funding. So just wanted to throw out there. I mean, 2 weeks ago, we were able to help one of auto body shop, Wade, 30,000. He got the highest cost approval, right? But if he didn't get that funding, it was going to cost him tremendous of his business, right? And he took it. And also, guys, they could get a high approval cost initially, but I know Wade's going to agree with me here. Once they get their foot in the door and they establish a relationship by the payback history, as long as they maintain the revenue or it goes up, right? They don't miss any days on payment. The second time around, they will get a better offer, a better approval. And that I just saw that with my construction client last week. He got $9,000. It was a small amount, but he got $9,000 last year. It was 1.55 the first one last year. This time he paid it off. He bought a machine. It helped him. That machine made him great profit. Last week he got 10,000, but now it was 1.49, right? So you can see that the payback, the terms did improve. He was able to receive the funds, which he bought a trailer for it. He already put it to work. And as you go and you establish the relationship with our lenders, the offers and approvals could and possibly will get better. So,
and Nick, let me just say something about that too. When you start talking 1.49 and you start talking 1.5, guys, these are normally declines. And they're not going to get offers anywhere else. These are normally declines when they have to pay that much. But as they go, I mean, they're going to drop each and every time. And like Matthew got one in July that he got funded on of 17,000. And this yesterday afternoon, he sent me the statement. So we got a renewal for 22. It's a little bit early to get that renewal, but they went ahead and did it because the client paid on time. And they were able to get from 17,000 to 22, pay off the other one. They're still going to get a really good, hefty amount of money that they're going to net. So I really appreciate you guys with those questions today, and I don't see any others. I hope you guys have a blessed rest of the week. It's Wednesday. We got plenty of time for you to hit your goals by the end